today's lesson is about investing, so make sure to pay attention and take notes.
So there are many types of investments, but here are the 5 main investments. So number 1, mutual fund. From the word mutual, which means the same understanding or action done by 2 or more people, and fund, which is basically money. Mutual fund then is a combination of money from a group of people who have the same understanding on how to invest their money, such as putting their money in the stock market. Number 2, equity stock. An equity stock is a share in a company. For example, you start a small business. You have 3 friends who want 20% ownership in your business. So they need to pay $10 for every 20% they want to own. So if you do the math, each person has to pay $10, which will be a total of $30 equity of the company. Many people make this type of investment because they also want to make money as the business rises and becomes successful. Number 3, bond. A bond is money to be lent or loaned to a company or organization that can be coming from the government and has an agreement to pay it back in a certain amount of time. For example, you ask your mom for $50, but you promise to pay it back within a month. Number 4, a commodity. A commodity is a product, good, and service that is traded, meaning that it can be bought or sold based on a certain price or value. An example is service of electricity in our house. Don't we all use electricity in our house? We all use electricity in our house so we can have light when it's dark in a room, plug our gadgets so we can charge them, watch TV, use our computers, and play our video games through our console. However, we consume electricity in our house based on the number of people that live in the house that use electricity. Then our parents have to pay the electric bill every single month, otherwise we won't have power in our house. To understand a little better, let's have one more example. Let's say you need gas in your car and you have to pay $3 per gallon. Small cars may only need little gas as compared to a van. So the bigger your car, the more gallons of gas you need, and then you have to pay more. And number 5, real estate. Real estate is not just buying a place to live in, but investing in an immovable property such as lands and buildings with its natural resources around it. You can sell the property at a greater price than which you bought it, but sometimes you cannot sell it quickly. You also have to pay some kind of property taxes every year. Other examples of real estate are buying office space, renting a house, and buying a building. Just like the house we live in right now, our parents invested money in real estate with the help of an agent. Then every month, our parents have mortgage to pay until they pay it off in 15 or 30 years and finally own it.
So before we start the video, I want you guys to pay attention so you can be able to answer these 3 questions. What is the percentage of money the stock market returns to investors? How much should we invest and why? And when should we start investing and why?
Here at Wall Street, Willie, what is investing? Investing is an action you take with your money to make it grow. There are many things you could invest your money in. Some popular options for investing are stocks, bonds, and real estate, all of which help your money grow. When you put your money in these avenues, they become your investments. We publish a video every week, so please click subscribe if you haven't already. It's free. Can you give me an example of how my money could grow when I invest it? On average, the stock market provides a return of around 11% per year over the long term. If you invested $5,000 in the stock market today, then in 20 years, you would have around $40,000, and in 30 years, you'd have well over $100,000, all from just the original $5,000 investment. That's the power of investing. You could turn $5,000 into well over $100,000. How much money do I need to start investing? There is a common misconception that you need a lot of money to start investing, but that couldn't be farther from the truth. Even if you set aside just $1 every day for investment, that that money could grow into over $70,000 in 30 years. Who should invest? Is it only for adults who have a steady income? Absolutely not. Everyone can and should invest whatever amount they can. It doesn't matter whether you're a kid, teenager, young adult, an employee, entrepreneur, or a stay-at-home parent. You should invest your money so it can grow into a lot more money over time. When should I start investing? The best time to start investing is now. The earlier you start investing, the more time your money has to grow. Let me give you an example. If you invested $1,000 when you were 40, the money would grow into over $40,000 when you're 60. But if you invested the same $1,000 at age 20, you'd have over $400,000 when you're 60. That's the power of starting early. But, like we mentioned earlier, you don't have to wait until you save up $1,000 to start investing. You can start by setting aside as little as $1 or $2 a day and invest the savings at the end of each month. Now, you have no excuse to not invest. Thank you very much, Wall Street Willie. You're welcome, Super Cooper. Remember, finance is your friend.
Okay, so the first question is, what is the percentage of money the stock market returns to investors? So the answer is 11%. Second question, how much should we invest and why? Answer is it doesn't matter. It can be as little as $1 because it will eventually build up over time. So the last question is, when should we start investing and why? So yeah, the answer is to start now because even if you're a kid, because the sooner you start, the more time you give your investment to grow over time.
Okay, so basic financial foundation. These are one of the less famous topics and most people ignore, but some kids and teens like us, or maybe yes, maybe no, think that it's only for older folks. But the truth of the matter is that it's especially for us kids and teens, and that's why not a lot of us know. So for start early, yes, it's important to start early because the younger we are, the more time we have to save for our future and for our money to grow. So savings and checkings. So it's important to start early, right? So as soon as possible at the age of 13, it may be older, your place or younger as 12, but I believe it's 13, your parents can now open a joint savings account with you. So you can't open it on your own, but with your parents, you can, but you're the head right of the account. And it will help you learn the importance of saving money and managing spending. So protection. My parents have established a plan for me for my future, and it's called Index Universal Life, which short IUL. It's a hybrid life insurance that has living benefits, cash value accumulation, debt benefit protection, and is risk-free against market changes. And this can be applied as early as the age of a newborn. And the importance of diversification. So don't put all your eggs in one basket. So don't put all your money in one place, for it can help balance money outcomes. So not only is it smart to diversify the different types of investments, for instance, like stocks, bonds, funds, and savings, it's important to diversify to types of companies, industries, and size of businesses you want to invest in. And while diversification does not ensure profit or protection from loss, it can help you balance risk and reward. So if you were to invest in one thing, but it falls down, you have no more money. So if you invest into different types, if one falls, you still have many types, many investments that you've already invested in, so you don't have that much of a loss. And it's okay to start saving. And okay, and it's okay to start saving in something like Social Security or 401k, but it's better to have like a tax-free protection like IUL. So for example, my parents have started a plan for me for about 4 years ago. Two plans 4 years ago, which was Transamerica and Nationwide, with both a 500k protection. So today, one of my plans, this one right here on the slide, is from Nationwide, and it has grown to 21k. These plans will be used for my future. For instance, my college education, maybe buying a dream car, or just letting it grow for retirement. I am so grateful that my parents have applied me for this, for not everyone can open an IUL. And that's why I encourage everyone to start saving as soon as possible, get a checking and savings account, get protected, and spend your money wisely.
Okay, so we already told you this. We told you to pay attention, but let's see if you actually listened. So we're gonna have a pop quiz. So number 1, what are the 5 types of investments? This is gonna be worth 1 point. Next question, describe a mutual fund. This is gonna be worth 2 points. Give examples of real estate. This is gonna be worth 1 point. Okay, so number 4, what are commodities? Sorry. Describe an equity stock. This is worth 2 points.